Great. Good morning, everyone. Thanks for attending. It's fantastic to have such a large audience with us today, and we have a very experienced team here to spend some time with you. I guess we're getting late in 2021, and 2022 must be upon us with the audience we have. We have been very busy working with clients, whether they be our audit clients or advisory clients, in adopting the lease standard. Some of our clients were public and have had to adopt many periods ago and have some time under their belt, and we certainly have advised them and learned a lot along the way. So we have a very esteemed group for you to provide some information to you. Jessica Helms is a senior manager in our audit and assurance services. Jessica really is in our professional practices groups, really fantastic resource for our audit clients and our advisory clients. She's been looking at various facets of lease accounting for the past 5 years, including various softwares and making sure the functionalities that we recommend to our clients are appropriate. Alex Wiley is with us. Alex and I work together. Alex is a senior manager in our risk and accounting advisory services. Alex has advised about over 50 clients so far in adopting the lease standard, and has clients in different software products he's had to navigate through, and this has really been a good resource. A partner, I lead our risk and accounting advisory services at Bekaert. We have about 40 people in our group who do nothing but really complex accounting, including everything from adopting a new standard to getting ready for an audit to going public, business combinations and the like. So lease accounting has been hot on our radar. We spend a lot of time on it and look forward to spending time with everyone today. Next slide. Today's agenda. So what do you need to know about the lease standard? You probably have been in some training before, but we get, the more clients we serve and the more trainings we provide, we get better and better at this. And we're going to give you our updated what you need to know. Obviously the deadlines, this to me is just a reminder for everyone. You kind of know it's coming. The history, there have been some delays, as you know, in the lease standard, but it's here. The impacts that it will have on your business, whether you're, it doesn't matter the type of business, everyone is impacted by this standard, whether you have 3 leases or 3,000. If you have debt covenants, if you have a large population of leases, if you're a lessee and a lessor, you're going to be impacted more, and you need to spend more time and get out in front of this a little quicker. We've been through quite a few of these again, so we're going to talk about our implementation playbook, how you adopt, some planning to do, how do you select a piece of software for you, who's right. You probably have heard from some vendors out there, some pitfalls that to avoid that we've worked through with clients, and then how we can help. So that's the agenda for today. When we move on to the next slide, we get started with the content, and Jessica is planning to walk us through the first part of the presentation. Jessica, I'll let you take it from there.
Thanks, Chase. So like Chase mentioned, before we really get started in talking about implementation, we wanted to just provide a refresher on the new standards of both ASC 842 and GASB 87 and what will be changing with your financial statements. So we're going to start out with the polling question. Let's take a look. Which of these entities do you think looks better? So take a minute, look at these numbers, and then we'll pop up the polling question and you guys can vote for what you think. Okay, Maddie, if you want to go ahead and start the poll. So we'll just give people a minute now. And it looks like we are getting a couple answers through the questions pod. Make sure you're choosing in the poll pop-up and not through the questions pod. You can pick your answer through that poll. You should be able to choose one of the answers. Okay, so it looks like 46% of you got it right. It's actually the same entity. So entity A is under the old lease accounting and entity B is under the new standards. And so we'll walk through what's causing some of those changes here. So just a little bit of background. These new standards really started as a debate as to whether we should keep the lease amounts for operating leases in the disclosures where they have been for a while or move them onto the balance sheet. So from the old chairman of the International Accounting Standards Board, or the IASB. And I think he's kind of joking, but you can just get a sense for really what started this conversation. So right around 2006, the FASB and the IASB started working on drafting some new lease proposals. And this was partially due by a request from the SEC to evaluate off-balance sheet arrangements. It started in 2006. The debate lasted almost 10 years, and finally, the FASB issued their standard ASC 842 in 2016, and then the GASB followed suit and issued GASB 87 in June of 2017. So a little more background as to why a change was necessary, or maybe why the SEC wanted to start looking into these off-balance sheet arrangements. So in 1974, there were estimated to be about $11 billion in off-balance sheet lease commitments in the United States. By 1976, this was up to an estimated 100 billion, so around a 10 times increase just in 2 years. And this was right after FAS 13 was issued, and FAS 13 is what created the rules that separated operating leases from capital leases. By the time we get to 2015, operating leases for publicly traded companies alone were estimated by the IASB to be over $3 trillion and comprise 85% of all leases. So these $3 trillion are all off-balance sheet liabilities at this point. So based on this huge increase in the off-balance sheet arrangements and unrecognized liabilities, this is how we got to the need for a change in these lease accounting requirements. And the goal of this change is to increase transparency and comparability. The main change is that operating leases will now be recognized on the balance sheet. So the new standards are much more principles-based than rules-based, and it's really just trying to make the accounting actually match the economics of the transaction versus entities playing games with their lease contracts to try and keep leases off of their books. And with almost 90% of leases not being included on the balance sheet under the old standards, it can be difficult to really see the true financial position of an entity because their future lease payments aren't shown as liabilities. But now all leases other than those that are less than a year long will have to go on the balance sheet. On the comparability side, it can really be difficult to compare different entities under the old standards because two very similar leases could be recognized very differently. So for example, you may have a company who says that the lease term is only 74% of the useful life of an asset. And based on that, they would recognize an operating lease. Another company may say, well, the lease term is actually 75% of the useful life. They would recognize a capital lease. And so even though the economics of these two agreements are exactly the same, under the current guidance, one company would show the lease on the balance sheet and another would not. So just no way to compare those two companies. And so now there's going to be less difference in recognizing different leases, and there are also more disclosures that are required. And so this will help the users of financial statements have a better sense of the true economic position of different entities. And so when do you actually have to do anything? Chase mentioned there have been some delays. There were a few different delays during COVID actually. but these dates now seem to be pretty set. So most private companies will need to adopt starting January 1st of 2022, and most governments will need to adopt starting July 1st, 2021. And one thing to note with governments, under GASB, entities will have to go back and apply retrospectively and restate comparable periods. So you may have to go all the way back into 2020 to update those numbers. Under ASC 842 for private companies, these entities can choose to recognize either going forward or retrospectively. So most companies, what we're seeing is that they're choosing to only adopt for the current year, but this means that in your year of adoption, the current year and prior year may not be comparable on your financial statements. So just a few things to note there when you're thinking about your adoption date. So getting a little more into the details, how is this really changing the accounting for these leases? So for existing capital leases, there's a very limited change here. It's mainly a title change from capital lease to finance lease. And then your capital lease assets will become right of use assets. And there's really no change in the income statement for these leases. So you can see these two columns are almost identical, other than some wording changes in the first row. Moving into the operating leases where the real changes are. So this first column represents the old operating lease accounting. So this looks familiar, I'm sure. You really have nothing going on except for straight line lease expense. The middle column represents new operating lease accounting under 842. And the right column represents how existing operating leases will now need to be recognized under GASB. And while FASB chose to retain a distinction between finance leases and operating leases, GASB did not. So under GASB 87, there's now just a single model for lease accounting, and operating leases no longer exist. So all operating leases will become finance leases, and this accounting here in the right column is the same as it was on the previous slide for capital or finance leases. And you can see the major change here is that operating leases will now have an asset and a liability on the balance sheet. On the income statement, there's really no change for FASB entities. And this is again due to the fact that there are still two different types of leases. But you do have a change for GASB since all leases are now finance leases. So what used to be operating leases for GASB will now be finance leases, and so those will hit your income statement faster. And again, this is a big change to the balance sheet. Like Chase said, no matter the size of your company, how many leases you have, it will be a large impact to the balance sheet. So make sure you're thinking through that, thinking through any impacts to your debt covenants, debt limits, different items that may be impacted by these balance sheet changes. A little more detail, just how things are recognized. So under the new standard, at the beginning of the lease, there's no difference between a finance lease and an operating lease. For both types of leases, you recognize a lease liability, and that's just for the present value of the future lease payments. And you also recognize a corresponding right of use asset. So then for the ongoing expenses, for finance leases, the right of use asset is amortized similar to a fixed asset, and then interest expense is recorded on the liability. For operating leases, again, this is under ASC 842 only, there's only the straight line rent expense, exactly the same as it was under the prior accounting. So again, keep in mind, there's no change for the ongoing expenses under FASB, but there is a change for GASB just due to the elimination of operating leases. There's also a difference in the cash flow statement between these two types of leases, as payments for finance leases are financing cash flows and payments for operating leases are operating cash flows. Everything that we've talked about so far is on the lessee side. So what are some changes for lessors? And really, many of the criticisms that were associated with the previous lease guidance were around the accounting for operating leases for lessees only. So for the FASB, addressing those concerns with the lessee accounting was their major focus when they were thinking about these changes. So ASC 842 really does not change lessor accounting, but some changes have been made to lessor accounting just to conform with some of the wording changes, and then also to conform with other areas like ASC 606 for revenue. GASB, however, did make more substantial changes to lessor accounting. So under GASB, at the commencement of the lease term, the lessor recognizes a lease receivable and a deferred inflow of resources. And this lease receivable should initially be measured at the present value of the lease payments that are expected to be received. So this really just mirrors the lease recognition for the lessee of the lease liability. The lease receipts then lead to a reduction in that lease receivable, and there's a recognition of inflows and revenues. And the lessor for GASB just continues to record and depreciate the underlying asset. So that brings us to our next polling question. Have you considered the tax impacts of adopting the lease standard? Okay, so it looks like we really have a mix here. And this is one thing that a lot of people aren't realizing. There may be a potential impact when they think about tax impacts of the standard. So we're just going to talk quickly through some potential tax implications of adopting these new standards. Just to note, tax law has not changed. And so the lease accounting standard changes don't affect how leases are treated for income tax purposes. And because of this, there still will be some differences in the treatment of leases between financial accounting and income tax accounting. Generally, you can continue with your current method of accounting for tax purposes. However, one thing that we've noticed is that implementing 842 may actually highlight some improper historical tax accounting methods. And so for this reason, as you're adopting these new standards, this may be a good time to analyze your current tax accounting methods and make sure that you're on a permissible method of accounting for leases. And not only that you're on a permissible method, but you're on the optimal permissible method. And then also that you're considering the tax implications of any anticipated future lease agreements. And a tax accounting method change may actually provide you more appropriate or more beneficial tax treatment. Another potential impact is that your new accounting records may not yield the same data for you to be able to continue with your current method of tax accounting. And your ROU asset, now the right of use asset, which is the intangible that will get added to your books, it might just be a single line on your balance sheet, but it's comprised of different components that actually have different tax implications. So you may need to continue to track these items separately. And we recommend that you discuss this with your tax advisors to make sure that you'll have the data that you'll need to roll forward your tax accounting for leases. Changes in your financial accounting method will also lead to additional book tax basis differences, and these could lead to new or updated deferred tax assets or deferred tax liabilities to be considered. There are then just various other potential tax impacts to be considered as well. So make sure you're thinking through these while you're considering the impacts to your financial statements also. So I'm now going to pass it over to Alex and Chase to get into a little more of the details around how to go about implementing these standards.
Thank you, Jessica, and thank you everyone for again joining us on how the implementation lease standard. I guess we'll start off before we jump into some of the meat of implementation of the new adoption standard. Next polling question. How do you plan to implement and adopt the new standard? Outsourcing to a third party, co-sourcing, which is outsourcing to a third party with in-house support, or full in-house support implementation, or not sure yet? We'll give everyone a couple minutes to answer and we'll okay, if we can show the results, please. Looks like majority of the, looks like it's a mixed bag, but the majority of the participants are either going to be doing co-sourcing, which is outsourcing with a third party CPA in-house, and then the other portion is full house implementation. Then obviously we still have the group that's 19% that's not sure yet, and hopefully after this webinar, we'll kind of reduce that 19% down. Next slide, please. Next slide I want to go through is how to adopt 842. And again, this is not a right or wrong way, but this is kind of the process that we at Cherry Bekaert take, that we really want to ensure that not only are we meet each milestone, but a complete compliance to the adoption of 842 and GASB 87. Like any new standard, any new codification coming out there, the first thing that we really asked our clients to do and client base to do is go through a preliminary planning meeting. Part of that planning meeting is going through lease inventory. What does my potential lease population look like? What type of underlying assets am I leasing? What side of the portfolio am I on? Am I a lessee versus lessor? Next part of that planning meeting as well is software capabilities. What am I looking for when I'm looking at leasing software? Do I want to focus on what we call the lease compliance section, which is journalizing the day one entry, journalizing the subsequent month entry, creation and preparation of the amortization schedules, as well as disclosures? Do I have a lease management piece that I want to focus on, or do I have a lease administration side? These first two data points here, we will talk about a little bit more in detail in the next couple of slides, but from that internal meeting that the clients have, the next thing we want to do is have a go live call. This call is where you really bring in CBH or any of your external parties, providers, to go ahead and have your go live hour gap call. Part of this discussion is going to be talking about the lease listing providing, to understand exactly what type of leases. Are there any complex leases in mind? Do we have any regulated leases for GASB 87? What are some of our underlying assets, or what's some of our other type contracts that potentially have a lease? From there, we're going to finalize the implementation plan and timeline. Once we've determined the implementation timeline for you guys, the first thing we want to get into is, based on our discussions we've had with you, is do we do a deep dive into some of those complex leases to ensure there are no other impacts, i.e. 606 other standard impacts. From that deep dive, we move into some of the policies and estimates. Obviously, as part of adopting 842 and 87, there are some practical expedient packages that you need to elect and approve. Discount rate. Am I going to select the incremental borrowing rate? Do I have that information readily available for me to come up with the incremental borrowing rate, or will I go with the risk-free rate? Also from there, once we've elected the policies and estimates, we're now ready to move into what we call the lease software input and input review. This is where we can help and assist the client once we've selected the software, identified a complete population of leases, helping taking those key lease terms and input them to the proper place into the software. Once we got all the information gathered, input into a lease software, from there, we're now able to write the gap memo. This memo is going to be an all-inclusive memo from nuts to bolts on implementation, some of the key decisions made, the impact of the financial statements, as well as conclusions. You can think of this gap memo as more of your technical memo when it comes to 842 and GASB 87. Once we've gotten through that piece there, the next thing we want to focus on is estimated impact of the journal entries. What is my day one impact establishment of RU asset and lease liability? What are my monthly amortizations? What classification geography changes to my income statement will we have now that I have finance leases with recording interest expense? And then lastly, what is the impact? What new disclosures are required from both the lessee and lessor standpoint? And once we've had a chance to kind of communicate all of these steps with the client, the last piece is communicating the key results to plans and stakeholders and the board members. Next slide, please. Again, just kind of this slide here, just a little bit more detail on some of the things you should be thinking about as a client when you're going through that planning discussion. Obviously, the first thing we want to talk about is what is your level of familiarity with the standard? Have I been exposed to 842 or 87? Have I had an opportunity to go through the trainings? Do I know the impact of adopting 842 and 87? Do I understand some of the practical expedience, lease versus non-lease components? How do I get my discount rate? Obviously, software discussions to date. Have we really thought about what type of software we're using? Do we really need to use a software? We found a lot of clients, a lot of times clients believe because my population is so little that software is maybe not cost effective. And what you'll find out in this day and age is that those tier 2 softwares are really effective even for a population of 10 or less. Another item you should be thinking about doing planning is how many number of leases do I have? Am I on the lessee or lessor side? Do I have real estate leases? Do I have any master lease agreements that are covering multiple assets? All these items will go into determination which proper software to choose. Second item, do I plan on subleasing property? Maybe I am only in the lessee side of the portfolio, but if I plan on subleasing any of those assets, that moves me to the lessor side, and I really should be thinking about selecting a software that's not only lessee functionality, but lessor functionality. Another item we talked about is discount rate. Again, because of non-public clients, you can use the incremental borrowing rate. More likely than not, that information may be readily available in the actual underlying lease. You may have a banking relationship with your bankers where you can actually pull a rate or a similar rate for similar assets. But other times that information may be costly to come by, and so because of that, FASB has elected what I call the practical expedient or risk-free rate. Next item is really something we tell our clients to look at: debt covenants. Believe it or not, with adoption of 842, there are going to be some changes to your debt covenants. If you think about it, you're going to now have a new ROU asset and lease liability. So my current asset to current debt ratio may change. My interest ratio is definitely going to change. You want to go ahead and have those conversations up front with your bankers on your debt covenants to ensure either can I get a waiver, or are there any amendments we can make to our debt covenants with the adoption of 842 and 87 so that we don't trigger any of those events. And then lastly, when we're thinking about preliminary planning discussions, are there any related party intercompany leases, and are those leases at arm's length transactions? What should we be thinking about? How are we going to account for those, and what is the required disclosures for them? Next slide, please. Before we go live, once the client has an opportunity to talk through each of those 7 items in detail that we talked about, you want to inventory all your leases. These are all your lease agreements that you know are lease agreements. Maybe you've had a chance to go through and look at some of your service contracts, but you want to review your service contract for embedded lease. Do I have an underlying lease? When we talk about service contracts, things to consider: logistic contracts, storage contracts, transportation, warehousing. Typically, these type of contracts we find have an underlying embedded asset underneath. How are we going to capture the data? We've gathered this population of leases. It can be 50, it can be 100, it can be 600. How do we go about capturing the key lease terms of the key data on the underlying leases? Lease term, the rent, that's by both our lease and non-lease components. Do we have any renewal options? And if we do we plan to renew those renewal options at the date of adoption, or do we plan to renew down the road? Are there any purchase options? Obviously, these options here is going to determine the classification of the lease. Are there any contingent rent or percentage rent that goes into our calculation of our RU asset? And then lastly, which software provider do I choose? Next slide, please. When it comes to selecting an approach for compliance, there's three basic levels that we've learned that most clients typically choose. The basic implementation is a self-service implementation using a pre-configured database. This is for the clients for a smaller lease population with very limited to no complex leases. Typically, this is done in-house. You think about it when a client with maybe 50 or less leases, and their focus is really on the accounting. So all I'm really focused on is lease compliance, creation of my day one journal entries, my monthly subsequent amortization, creation of my amortization schedules associated with each lease, and then the annual disclosures. With a basic implementation, typically we've seen it where a lot of companies typically want to do it in-house with little to no support from CBH. But again, we still can provide some of that, what I call advisory service on that. The next type of approach to compliance is a full implementation. This is for a higher volume of leases, more complexities in lease spending. You want to have a more robust lease accounting administrative solution for our clients with 100+ leases. And not only are they concerned with lease compliance, but they're also concerned with lease management and lease administration. Here, we're doing more of a hands-on approach. With the full implementation, you're usually using CBH or any third-party provider to do not only the project management side of the business, but also more technical, helping clients go through some of the more technical items, especially when we're looking at some of the more complex leases. You know, are there any underlying agreements associated with this lease that may be excluded from 842 or 87? And then lastly, you know, obviously we all are concerned about that day one implementation, but we tend to forget that there's accounting required after that day one, and we call that day two accounting. And this is part of our Lease Accounting Services, trying to simplify an ongoing accounting, reduce the ongoing client effort for day two accounting. Typically, we can scale this from small to large enterprise portfolios.
And Alex, one thing I'll add here, in general, we've had the opportunity to work with both our audit clients or our test clients and advisory clients. And, you know, in general, with each of those arrangements, we have a client on the staff member who really owns the implementation project. So we're able to provide quite a bit of a solution even for our test clients. Obviously, there's a line we cannot cross. We know what that is. We outline it in the engagement letter. In no way are we journalizing accounting entries. Quite frankly, once you get your project along through some of the gap complexities, the software does quite a bit for you. So that allows us to keep a high level of independence while providing good solutions for you.
No, thank you, Jason. That's a fair point there. Next slide, please. Brings us to our next polling question. Have you chosen a lease software yet? We'll go through some of the options. No, we're not planning to use one. Hopefully we don't get too many of those, and not yet, but planning to. And third option is currently evaluating options. And then last but least is yes. Give it a couple more seconds here and we'll show the results. All righty, looks like it's a mixed bag. 42% saying no and planning not to use one. For this one here, I really want to make sure we understand. I think the next couple of slides really kind of focus on some of the things we think about when we're looking at a software and some of the benefits of using a software. We got 18% not yet, but planning to use it. And then obviously the last two, currently evaluating options at 23%, and then the 18% of yes. Next slide, please. When you're thinking about some of the software to use based on your lease portfolio, here's some of the attributes you really should be thinking about. Origin of software, you know, am I on the lessee or am I on the lessor side, or do I have both lessee and lessor software? Do I need to FASB, am I under FASB 842 or do I have a GASB 887 type software? Based on which codification and what type of leasing portfolio you decide that you actually have, it's really going to depend on what type of software you want to start looking at. Am I focused on lease compliance or am I concerned with lease management and lease administration? We found a lot of our clients who have a large piece of portfolio typically want to know about their lease management, critical dates, lease administration, due dates, renewal option terms, and want to have that option. Do you want to have the ability to have an ERP integration? What that means is, do I want to actually import or input my journal entry manually, or do I want to have my software having the capabilities to have an interface with my ERP system to upload that journal entry? Do I have multiple entity capabilities? Depending on how your company structure is set up, you may have leases at various different reporting entities that roll up to the parent company, or you may have different departments that have their own leases, and you want to be able to report out those leases on the individual company basis as well as roll them up to a company-wide basis. Do I have the import capabilities? If I have multiple leases, 50 plus, you want to think about, can I have the ability to upload all my key lease terms within one clean shot rather than going lease by lease? Again, this side here, am I focused on lessee accounting and reporting, or should I be also looking at lessor accounting and reporting? Short-term determination. Some lease, we will notice some lease softwares just accept the information you put in. Some of them will determine based on the lease term if it qualifies for a lease that needs to be capitalized under 842. Vendor supported software. What type of support am I getting? Once I've gotten through the training, once I've uploaded all my inputs, what type of support, how often can I get support, and how easily is it to contact the vendor for support? Obviously, one of the last two items are very key: cost comparisons and implementation difficulty comparisons. These are just a few items you should be thinking about as you're going to think about which software to choose. We typically tell our clients there's a benefit of using a software not only from a implementation standpoint, but an audit risk standpoint. Any client with 3 or more leases, we really kind of highly suggest to use a software, because you'll find with this new standard, though it's not complex, trying to adopt and calculate your ROU asset along with a lot of the modifications under 842 and 87, such as renewal options, change in lease terms, trying to capture the information not only in an Excel spreadsheet increases the risk of error, but you'll notice really increases your audit risk. Next slide, please. Some of the common pitfalls we've noticed as we're going through and helping clients adopt that we want to avoid. Losing sight of the original goals of compliance. Some of the clients, we think, like we noted, forgetting to recognize there are day 2 activities processed after compliance. Obviously, the big hurdle is not only selecting the software, getting all the inputs into the software to calculate that day 1 establishment of the RU asset and lease liability, but not to forget that there's also day 2 accounting requirements. Forgetting to build a definitive list of requirements. This goes back to our planning. When we're thinking about not only what's going to be the impact of adoption, but what the type of leases we have, what exactly are we looking from a software provider? Do I want to focus on lease compliance, or do I also have a lease management, lease administration piece of it? Another biggest piece that we really find clients thinking about, and I think this really kind of falls into the client pushing back, is forgetting to establish a detailed project plan. Obviously, we know FASB has pushed back this standard couple years now, and now that we're up against the deadline, really establishing a detailed project plan to ensure that I'll be able to have time not only to adopt and implement, but have time for that to get used to the software, get used to the impact, to be able to input into my ERP system. Beginning, I think this one goes to the 42% that's planning on not using new software, but this is a new standard and the software is still new. In this case, we've had multiple years of the software in this case. I will say that compared to 2018 and 19, the software has improved. Most software providers out there are now able to do what I call the lease compliance, the journalizing, the creation of the amortization schedule. as well as disclosures. They're now getting more robust into some of the reporting requirements and API interface. Next item we think about is underestimate the level of effort necessary for the lease abstraction. I think this item here is really key. No matter what your lease size in your portfolio, be it 50 leases, be it 600 leases, we all have our day-to-day 9-to-5 responsibilities, and understanding that the level of effort it's going to take not only to manage this project from an implementation standpoint, but once we've identified all the leases, having a dedicated resource, be it in-house or through CBHH, someone to go through and abstract all the key terms and input into the lease systems. Begin to engage the right stakeholders from across the entity. A lot of times we find clients only focusing on the senior accountant or maybe the controller, but not really engaging the proper stakeholders, be it from the contract perspective, be it from the actual people inputting the lease information to the key decision makers. The next item is neglect to plan for contingencies in case the project becomes too complex. I think this kind of goes along for those individuals who are thinking about doing this in-house, and as we get farther along through the project plan, realizing that this may be too much of a task to take on by ourselves, not having a backup plan to engage the CBHA or any other third-party provider. The next one is skimping on the testing and validation. I think this goes toward timing here. We don't want to wait until 12/31, middle of 2022 to start thinking about implementation, because not only do we want to have a successful implementation of day one adoption, setting up the software, we want to give you time to play around and get used to that software. How do I generate my journal entries? What do I do if I make a mistake on generating my journal entries? How do I generate those amortization schedules? Do I feel comfortable enough that once I'm by myself, I can present these information within my ERP system properly? Finalizing the pricing of your software until you have a good understanding. A lot of times we go through here and we may or may not have a good guess or good estimate of what the cost of the software is going to cost. You get a bill or you get a proposal and it's a little bit more than what you were realizing. So we really want to take that opportunity when we have those demonstrations of the software to really understand from the software provider, what are my true costs upfront as well as my annual costs. Last but not least, forgetting to update your control environment around lease transactions. Obviously, this is a new lease standard. Adopting any new lease standard, like any standard, there's going to be a change in controls. Who's going to be inputting the lease information? Who's going to be reviewing that lease information? Who's going to be processing and reviewing those journal entries, along with who's going to be reviewing the disclosures associated with lease transactions. Next slide, please. Some of the experience we have with existing clients, obviously in the software and scoping, helping clients review management software, review their options recommendation. Our job here really is to help a client identify what software is going to work best for them, not only on a day one, but an ongoing perspective. Meeting to scope the project and do a deep dive into complex leases. Another kind of service we've helped clients with, it's easy to identify when we have a lease, when we have agreements to say leasing agreements on there, but a part of the standard is not only to look at underlying leases, but those leases of service contracts with underlying embedded leases. We really can help assist the client with identifying those embedded leases through questionnaires, review of their purchase agreements, review of their actual GL data dump, looking for key terms to identify if there are any other items that are being recorded from a rent expense. Another area we can help you with is a detailed review of the various leases. We break this up into multiple categories. Your type A type lease is what we call more complex leases. Type B are what we call maybe not as complex, but it's not as vanilla. They may have some underlying transactions or underlying arrangements that make this complex. Your type C leases are what I call your more plain vanilla building equipment type leases. And then for our governmental clients, review of your regulated leases. And then we talk about the ASC 842 transition. As we noted, part of some of the services we can help you with is preparation of the GAP memo describing the lease adoption, scope implementation, as well as key decisions and conclusions made, disclosing and documenting some of the lease input, as well as helping with preparation of the qualitative and quantitative disclosures. And then lastly, for our clients from a control process, documentation of the readiness of the internal controls that surrounds lease accounting, as well as training and ongoing management of lease accounting. Next slide, please. That's the end of our presentation. If there are any questions or anything that we want to go through, I will definitely open it up. But you see here, you have Chase, myself, and Jessica's information for any follow-up questions.
Alex, great job. Yeah, one thing that Alex emphasized, but I'll just kind of pile on. If you lease software providers have gotten really price conscious, and you know, if you have a finite set of leases and you think that software is too expensive, you may be surprised. You know, we have some lease partners that can provide services, and I'll just give a number for, depends on how many you have, but less than $200 per lease per year. And so that is, if you consider the cost of an FTE or some portion of an FTE, that can be a value. So you might think the journal entries and disclosures that are provided are fairly robust from those products. And Jessica, I know we have some questions if we have time. I think, Jessica, you've answered quite a bit along the way, but.
Yeah, I've answered a few in the chat. Let me see if there are any here that we should go ahead and answer. One that came in was a question really about the income statement impact for the entities. And so this question was, is this mostly going to be amortization, depreciation expense, so below EBITDA, or will leases impact EBITDA? And for FASB, this really is going to depend on your lease classification. So if you have an operating lease, this is an operating expense, and it really will be exactly the same expense that you had previously under the old standards. So that will impact EBITDA. If you have a finance lease or what used to be a capital lease, that will be below EBITDA because you have interest expense and amortization expense. So you could have different types of impacts. It really just depends on your lease classification when we're talking about FASB clients. Let's see what other questions we have.
I see a question about leases that are on a month-to-month arrangement. You know, generally there's a practical expedient that allows you to exclude the accounting for leases for less than a year, but you need to consider the likelihood of renewing your leases. That really, in my mind, the way I describe it to my clients, that becomes an accounting estimate that you make, just like you're estimating perhaps an allowance for doubtful accounts or an amortization period for a fixed asset. You need to estimate how long is likely that you'll be in a building or use a piece of equipment that is leased, even if it's under a month-to-month arrangement. If it's in excess of a year, then you need to measure that through the accounting standards. Then you're also, the other thing I'll say is at the end of each period, for each reporting period, you'll need to update your estimate of renewals for each lease. So that is a process that we're educating our clients on. You know, there is some maintenance around the accounting after the implementation, and that's one area that you'll have to continue to update.
Here's another question. As a landlord of residential real estate, will I have to change my reporting for the 1-year leases? And I would say, I'll let Alex and Chase add on or update what I say, but for the most part, if I'm assuming this is for a FASB entity, there are a ton of changes on the lessor side. So it's likely that you can still follow the accounting that you're following right now for those 1-year leases of real estate. There are some slight nuances that you would definitely want to consider, but I would say it's highly likely you can just keep your same accounting that you've been doing.
And that's fair, Jessica, as well. I think that's correct. We also have another question here. Do you have any lease programs you would recommend or programs that you suggest? We work with all the providers out there. We do have a couple partnerships with both Lease Crunch, Lease Query, as well as DebtBook. It goes back really to based on your portfolio. You know, what are your needs? Are we focusing on a lease compliance? Do I want to have both lessee and lessor accounting? So I think with more conversation around that with the clients, we definitely can help point you in the right direction.
Here's another one. How do you account for leases that change in amount every month? And this is a good question because we are seeing a lot of leases that have rent amounts that are variable in nature. So, for example, say you have a retail location and your rent changes every month based on your sales or some other factor that's variable. Those variable amounts don't get factored into your lease liability and right of use asset, and they can just get recorded on a month-to-month basis. There are, again, some minor exceptions to that, so there's a chance that things would have to be recorded. For the most part, those will just get factored in every month to your expenses.
There's a question around materiality considerations for adopting the lease standard. You know, in general, what I would say is that if you were to make a argument around materiality, you know, you would not be in compliance with GAAP. However, you know, accounting conventions are made around certain items, not capitalizing certain assets over a certain amount. Generally speaking, we work with our clients very quickly to assess the materiality, and we use a measure that we know your auditors will be comfortable with. What you really have to consider, though, is the balance sheet impact for many renewal periods, because that can quickly become a very large asset and a very large liability that becomes material regardless of your P&L impact.
We also have another question around, you know, what do we do about existing leases on the, you know, prior to adoption? With 842, you have a couple elections there. You have the ability to continue to use for those finances leases under 840, continue to measure those leases under 840, or you do have adoption or an election to do a remeasurement. So all those leases under the finance lease had a classification. You can obviously, when you're adopting 842, elect to remeasure those from a classification standpoint as well as remeasurement standpoint. So 842 does give you the option to either or continue to use the same classification, accounting balances, or do a remeasurement from 840 to 842.
Handful of questions here about wishful thinking regarding further delays. We have not seen any indication that there will be further delays. We think that you know, the FASB and the GASB, you know, recognize the maturity that the public companies are gaining, that CPAs are gaining around the standard, and we have not seen any indication that there will be additional delays. We expect a very healthy amount of discussion within our group. It's already occurring. We expect it throughout 2022. Our advice would be, you know, as soon as you can, start to focus on a good solution for you. Quite a few questions around here. Can you provide a list of software? I was in conversation because it really depends on your needs as to a good software. Do you use a basic solution that's very cost friendly? Do you have are you a lessor and a lessee? That is really important. And as well as a few other questions. Do you need disclosure capability? So on and so forth. We're happy to have that discussion with you. It's a quick one. And Alex says many a day. So happy to do that.
I have another question here, Chase, and I think it kind of goes to the polling results of not using software. You know, should we be thinking about software if we have 10 or less? I think that question there is really, really key. If you think about it, some of the benefits of using the software is able to homogeneize these calculations across multiple leases, be it 10, be it 3, into a database software that has a SOC 1 report. Whereas you're doing this information in Excel spreadsheet, there's a risk of fat fingering, typo errors. There's a risk of maybe a calculation error. So we really do suggest using a software, no matter what size portfolio. If it's more than 3, less than 10, definitely think about software. And then some of the benefits, now that we're 2-3 years removed on these software providers, you really benefit from a cost perspective. As Chase alluded to, less than $200 per lease. So if you think about it, if I have 3 leases, 2 leases, it's going to cost me $500 to own a software on an annual basis. That $500, that risk is going to definitely outweigh the cost when you think about going through an audit from a significant risk standpoint.
And Maddie, I think we have talked enough, right? You're
Is
you're gonna
that
wrap
the
us up
cue?
here.
Well, I just wanted to add a couple things. I wanted to make sure that everybody who's joining was able to access that survey link. I dropped it in the chat a couple times. I'm going to do it one more time just now. That is a requirement for CPE purposes. So if you click that link, it will take you outside of this meeting into a separate web browser, answer those questions, hit submit, you will be good to go. Otherwise, thank you all so much, Chase, Jessica, Alex. Wonderful presentation. Great job answering the questions that were coming in. If your question did not get answered, we are collecting those. We can follow up later. And if there's nothing else to add, I will give you the gift of 2 minutes back for your day.
Thank you, everyone.
Thank you.
Thank you.